All right, bells, bells and whistles. No, bulls and bears. Back with another dose of economic reality. I've got to slow down here. I had an energy drink earlier, so I've been talking faster than normal, and things don't work out well for me when I talk too fast. Back with another dose of economic reality. BX4 News. JJ back in the building here. Ride the bull, prepare for the bear, folks. Let's talk about what's happening, folks. The military parade, as I said here, was going to be a pretty big failure. And this is not political. I'm not left. I'm not right. I'm just letting you know the numbers. The turnout was abysmal. In fact, we're seeing reports that the number of protesters was greater than the number of people that went there to actually see the parade, right? And again, I'm not left. I'm not right. I don't care either way. I'm just letting you know what's happening and what it is. It's a big waste of money. Obviously, a lot of people agreed with me because the attendance wasn't very good. But, the thing that we were promised way back a few months ago, at the beginning of the year, rather, it's going on 6 months, we were promised stimulus checks from all the money that we're saving, and all the people getting laid off is going to save the country billions and trillions, is what we were told, right? And, of course, a month later, we looked at the numbers, and we saw that the spending wasn't stopping. In fact, if you look at the national debt, it was still not only increasing, but increasing at faster levels, right? We're digging into debt even faster. So if you're digging a hole and you're going down 1 foot every 10 minutes, you started digging and now we're going down 3 feet every 10 minutes. You dig faster and the whole debt was accumulating even faster when things were being cut. We were told that things were being cut. So obviously we knew right after it happened, like within the first month, of this new administration, we knew that things just weren't adding up, didn't make sense. And so here we are with all this spending and still broken promises. The cost of living hasn't went down. So how do we benefit from it? Well, we trade. We make money off of it. I think a lot of people are like myself. You're waiting for a big shoe to drop. But if you look at the markets have been pretty resilient, even with almost World War III breaking out. Over there in the Middle East here. Take a look at the markets. Today on Monday, June 16th, Dow Jones in the positive, 0.75%. S&P 500 in the positive. Let's see what it was here today. 0.94%. So, folks, nothing can stop these markets. If something big enough happens where the markets drop, then if you're like me, you're going to have investment funds available because I do think there's going to be a scare event. But ultimately, I'm bullish because any correction or sell-off always gets met by massive money creation. Helicopter money pushes markets up to all-time highs. And look what happened since the scare and the sell-off at the beginning of the year. Just looking at the Dow Jones here. Year-to-date chart. We saw a huge sell-off. And what did I say? Buy the dip. And we were exactly right. Look, we've almost recovered to where we were, almost regained these highs back to the beginning of the year, folks. So that's the name of the game, folks. People think I'm bearish, that I'm doomish and gloomish. It's just the opposite. I'm bullish long term. It doesn't mean that there's not going to be dips and corrections along the way, but if you just look back at history or even a chart, you see that every dip, every sell-off, every market scare, every downturn, every crash has been met with the new rounds of money printing and more loose money policies and catapulted prices and the cost of living and markets back to all-time highs, folks. It's so simple. But yet I get called a bear for stating the obvious. Just look at a chart. Go look at any chart. Every correction or downturn has been met with massive stimulus and then pushes to all-time highs. Price levels, the housing market, car prices, stock market, you name it. Massive money creation, folks. So anyone that's bearish on that is simply not looking at history and not looking at the obvious facts. So why do I get called a bear or why do I get called doom and gloom when I'm bullish long term? Bullish long term. Just because I say that I'm waiting for a correction doesn't mean I'm bearish. Any correction is going to be met with new money creation and new all-time highs. So you buy the dips. And when a crash happens, you buy the crash. I got real estate in 2010 because of a housing market crash. It was a great time. And I probably would have never been a homeowner if it weren't for that because with the prices the way they were before the 2008, 9, 10 crash, I couldn't afford a home. So that was a great opportunity. And I think the same thing is going to happen if we're going to see, something massive break out. I mean, again, obviously World War III on the doorstep here, between what's happening. It's still not bringing the markets down, folks. Crazy. What will bring the markets down? Other people say that I'm wrong. There's never going to be any downturn, that everything's going to be new all-time highs no matter what happens. Nukes could be flying, and there's people out there saying that's not going to have any impact on the markets because they're so used to markets just recovering and being pushed to all-time highs. I could see that point, but I'm not taking that position right now, and I don't think probably most of you are not either. But let me know if you feel like I'm right on this. Am I wrong? Let me know. I mean, does this make sense to you? But let's go on to some other news, folks. A lot to get caught up on today. By the way, happy late Father's Day to all the fathers out there and to all the fathers at heart. I took the day off yesterday. I happen to be a father, so happy late Father's Day to all father figures out there, and especially the good fathers, the ones that are spending time with their family, doing what needs to be done to be there for your kids, especially you. All right, but lots to get into today. The military parade, of course, all over in the news. On that, some people are saying, certain outlets, certain news agencies are saying it was a success, it was awesome, it was massive. But folks, we know that the numbers, again, like several cities, the protesters in several cities had more people at those than they had actually in attendance at the military parade. That's what I saw based on the reports and the pictures that I saw. Back that claim up. All right, but again, let me know down in the comments. Is this you? Are you disappointed that we're seeing this type of spending with a bunch of people marching down the street in tanks when we were promised stimulus checks and all this money saving because we're cutting so many different jobs and we're collecting all this money on tariffs, but yet debt's still rising, right? Like never before. And people, I think, are starting to feel the shock of this like never before. And we've got some stories here, some news details that I think you're going to see actually back up that claim here. All right, first of all, folks, let's jump into the housing market. We're getting many reports out, such as this one here out of the Post. Sellers are flooding the home market while buyers are sitting on their hands, and certain cities worse than others, and it's creating a historic imbalance. So why haven't prices come down very much yet? And in some cases, not at all. Prices haven't come down very much at all. Even in the cities where prices are down, they're not down that much. Why? Why? If there's such a big difference between sellers and buyers, so much inventory, and so many more homes for sale versus buyers, well, that's because the sellers haven't become desperate enough yet to slash their prices significantly. Now, last week we had a real estate report where most of the report was just about real estate and the housing market and home prices. And what we saw was some price cuts, but usually it's like maybe a 4 to 6% price cut, nothing major. When sellers get desperate, you'll know because price cuts start becoming 10%, 15%, 20%. Of course, going all the way back to the housing crisis again, you saw people slashing their price by 30, 40, 50% when they were panicking. We haven't seen that type of panic yet. People are locked in at low interest rates. Remember, we have a lot more big money, a lot more top 10 percenters that own the homes today versus back then. And of course, big money's less likely to be desperate and have to sell their home. So we're seeing a lot of differences here in this market. So no, I don't expect a housing crash. We'll probably see some price corrections in certain cities. We're already seeing it throughout cities in Florida and Texas. But unless something big comes in and destroys the money creation system that's in place right now, you're not going to see a housing crash, folks. They're going to make sure of that. But something else I thought was interesting, investors coming in and buying homes, especially in lower priced areas like Texas, Oklahoma, Indiana, Ohio, still in Florida, Georgia, Alabama there. So some other low price states, investors scooping up these homes. So basically coming in and outbidding a lot of people that are looking for entry level homes. A lot of people went to these states from higher price states to buy an affordable home or to get into an entry level home because they couldn't do it in their other states. And a lot of them now are getting outbid by big money and investors, right? So not a good situation if you're looking to buy a home. So how much worse is it going to be? Are we going to still see investors rake up so much more property? And that's not good for anybody except for maybe the investors themselves. And you see, and it's obvious that when housing became a money-making system and an investment instead of just a place to live, that's when prices started going crazy. And until that changes, folks, you're likely not going to see the cost of living come down much in housing. I mean, that's just the sad reality of it here. But I wouldn't be buying a home right now because I still feel like there's a lot of shoes to drop. And, we're going to see things in this country that I don't think anyone is going to believe. Look at all the protests, right? We're just getting started. We're 5 months into the new administration, technically 4 full months, going on 5. And we're already seeing massive protests across the country. Over the next few weeks and months, and especially over the next year or two, you're going to see massive changes in this country. It's going to be crazy, folks. But let's move on to some other news here, some other stories. Now, one of the things people are wondering a lot is they're wondering, how can this still be propped up with the record levels of debt, all the credit card debt, delinquencies rising, breaking records in some categories of delinquencies? How can people still keep their head above water? Well, they're finding new ways to kick the can down the road. One of those ways is something we've talked here quite a lot about, and that's buy now, pay later. The buy now, pay later lending loophole is building a debt bomb. So this is debt that's not being reported on people's credit profiles. And so it's allowing people to go ahead and still make purchases when normally, even with their credit cards, they couldn't do it. All right? American households are sinking deeper into debt with total consumer liabilities reaching record levels amid rising living costs, stagnant wages, and the return of student loans having to be repaid. Recent data says that U.S. debt has ballooned to more than $18.2 trillion in early 2025, an increase of $4 trillion since 2020. And it's an alarming increase. So how are people still keeping their head above water? Because they have other ways to borrow money. In fact, the lending is so crazy on these buy now, pay later apps. Take a look at this report here from The Guardian. How did I get approved for a $30,000 buy now, pay later? And they're asking, is buy now, pay later headed for a fall? I mean, look at this. This person here, Nicole Hartman, purchased her home in Pennsylvania. She needed help to replace the hot water heater, to get new appliances, fix other pipe issues, along with making the home more medically accessible for her children. So she had to do some repairs and upgrades. With loans taken out for the home itself, it was impossible for her and her husband to get a personal loan that she would have used that to pay for these upgrades, new hot water heater, etc. She maxed out credit cards. So that line of credit, that buying method was gone. She had $30,000 of debt, though, that she was able to take on with Affirm, which is a buy now, pay later outfit there, and $88,000 worth of credit card debt. And her household income is $150,000 a year. So there you go, folks. $30,000 of debt put on a buy now, pay later scheme, lending service, and $88,000 on credit cards. Without this, folks, people wouldn't be able to continue purchasing things right now. And people are buying groceries on buy now, pay later, folks. So we're getting to a point where you're going to start seeing, unless they come up with a new pull a rabbit out of the hat trick, you're going to start seeing massive things unfold. We're already seeing homeless unfold. I shouldn't say we're going to be. We're already seeing it. Homelessness, massive increases, record-breaking again last year. We'll see the numbers this year. Probably going to break more records with the number of new homeless people. They're hiding it better. So in certain cities, including my city here, San Diego, they're keeping people off the sidewalks. So now you see tents under bridges, out in the woods more, by rivers, stuff like that. Van down by the river. In this case, tent down by the river. It's crazy, folks. And it's just going to keep on getting worse because nothing structurally is being done to change the trajectory that we're on. Military parade's not going to change things, not going to help things. Lower interest rates that they're calling for, it's not going to help things. It's going to make things actually worse in the long run. But real quick, before we move on, I wanted to loop back to the beginning of the video. And what I meant to actually add into that was the fact that I do actually support the military. I have family that are in the military right now. I have my father's a vet. He was in the military, served in the Army. I support the military. I'm just saying that a $45 million military parade, when we were promised cost of living going down, we were promised stimulus checks. Not that I think the stimulus checks will help. I think they'll do more harm than good, because it's going to be the equivalent of buy now, pay later. People are just going to go out and spend it and cause prices to go up and cause more inflation. But the fact that that's what was promised versus what we're actually getting, more spending, not less spending, higher prices, not lower prices, folks, just the whole thing just seems like a pretty big scam, if you ask me. And maybe I'm wrong. Let me know down in the comments what I'm wrong about. Don't just say that I'm doomish and gloomish. Just tell me exactly what I'm wrong about, or what you disagree about, and I'll be glad to read it. And maybe you can teach me something down there, because most of you are experts out there, right? And I'm not an expert either. I don't pretend to be. I'm just someone that likes looking at the economic news and pointing out the pretty much obvious things happening right now. But let's move on here, folks, because a couple things I wanted to get into today. In this. And bringing up a chart here, folks. Graduates, people with degrees, huge number of them now, working in jobs that don't require a degree. So in other words, someone with a bachelor's degree, a master's degree, working at Starbucks, maybe working at Walmart. And it's worse now. Well, here's the gap here. Let me just enlarge this. Here's the gap. The bottom line is all graduates, but recent graduates, huge gap there, folks. Huge number of people working in a job that doesn't require a degree, and that's actually over 40%. Over 40%, folks. So 4 in 10 people working at a job that doesn't require a degree, and they've got a degree. And obviously with the degree, most of them have a lot of debt. So that's the problem, folks. You're working in a job that you could have just worked at without getting a degree, without going into debt. 4 out of 10 people, folks. So what does that tell you about what's happening right now? Also, we're being told that tons of new jobs are coming back to the U.S., new jobs being created. But look at this chart. This chart begs to differ. U.S. non-farm job openings rate. Folks, it's plunging since the peak in early 2022. So don't let them tell you that things are getting better, folks. It's plunging. Of course, we had the stimulus effect coming out of 2020. They created a lot of new jobs because when people have money to spend, it creates jobs. But now people are crunching their wallets. They're using buy now, pay later. They're maxing out their credit cards. So the job openings are dropping. You may see some month-to-month ups and downs, folks, but long-term, the trend and trajectory is lower on that data. All right, folks, we're going to wrap this one up here and leave you with a positive note here. And hear me out. It doesn't sound positive, but it actually is. Lonely older adults may actually live longer, surprising study shows. Remember, we used to hear those studies about loneliness kills, and loneliness equals sadness, and sadness equals early termination of your life and stuff like that. Folks, I think it's the opposite. The more lonely you are, the more time, the less stress you have. That's my opinion. And I've seen both. I've seen being single for a long time and then having a family. It's stressful having a family, folks. So I actually believe the studies that say lonely people live longer. Lonely people live longer. I actually agree with that. And it's not the end of the world. If you're lonely, you don't have a family. It shows this sad-looking person here just looking out the window. Just go to any place where people are drinking, and you'll make a lot of friends. Any bar, shoot some pool, nightclub. Maybe if you're older, you don't want to go to a nightclub. Any bar, folks, where people are drinking, you're going to meet a lot of new friends. I know I've been there. I used to do that. So you don't have to be lonely. You can make new friends, probably other ways too, but especially when people are drinking, they're really friendly, aren't they? Are you one of those people that's really friendly when you're drinking? All right, I'm kind of like that. I get even more friendly than I am normally, and I'm pretty friendly guy even when I'm not drinking, but I don't drink anymore, and I'm still friendly. So hopefully you don't need alcohol to be friendly. I know I'm getting way off the subject here, folks, but this is a real article. Lonely older adults may actually live longer. To me, I think the biggest stressful thing, though, that I've ever been through in my life is financial stress, right? It's a big thing. It's the number one reason why people split up and relationships end. It's the number one reason for divorce is financial, folks. It's the number one reason for stress and anxiety, I think. I think it's financial, folks, and that's why you see exploding numbers of people needing help, mental help, because I think it's the debt situation, the monetary situation, and the inflation and cost of living going nowhere but up, folks. And yes, you may see some corrections, but ultimately they're going to push this up again. Everything, folks. Let me know about any of this down in comments, what you think about it. Maybe add to it, criticize me, whatever you think. But I appreciate you being here either way. Like to hear from you. As always, keep stacking, folks. Bye for now. Peace.